Good morning, everyone. This is Tom with CertifID. We had several hundred register. We're going to give it about 60 seconds to get at least a bulk of everyone in the session, and we will kick things off a little after, let's say, 11:01, maybe 11:02 here Eastern. So we'll be right back with you.
You gotta love Zoom.
Lived off it now. It's been a very efficient year. I mean, I'm looking forward to the live conferences, but man, we got a lot done.
This week, I just started seeing people in person again because I'm one shot vaccinated, and it's so nice to see people. But I was only able to do about, I think, 4 appointments yesterday versus my record. I had several days throughout the last year where I did like 13 and 14 meetings in a single day.
I'll tell you what's a dumpster fire is a 6-year-old trying to get through kindergarten on Zoom.
Yes.
That was our 12 months ago to this day.
I had one of those too. Yeah. And a 9-year-old trying to get through 4th grade and a high schooler. Brutal.
Oh, I got a 9-year-old as well. We're on the same track.
Yeah.
That's great. All right, guys, we have a quorum here. Good morning. We had a ton of interest for this session. For those of you I have not had the pleasure to meet, my name is Tom. I am an attorney, large title agency owner, and co-founder of CertifID. We have some awesome guests with us. We've got Robert Lindley, and we have Janine Wells from Canyon Title. I've gotten to know both of them fairly well over the last couple months, and they are going to just share and help us through a story of mortgage payoffs. Before I get to that, a little bit of housekeeping. You are in the new series this year to Catch a Fraudster. Our goal each and every month is to take a segment of fraud, particularly in the real estate industry, and unpack it. So what happened? Why did it happen? And what could have been prevented? So if you have questions as we go through, please put them in the Q&A panel. I'll have that open and we may address it in real time. None of this has been scripted. We didn't even have a pre-call. We know this stuff very well, but we were really anticipating going through some information in the slides, but having an open dialogue. The other thing is just in a few minutes, we're going to launch a poll to get a baseline around the topic of mortgage payoffs and wire fraud risk associated with it. And then we're going to end with kind of a fireside chat, the three of us, along with the questions that come in around what do we do. And in particular, I had titled this Mortgage Payoffs Under Siege because in real estate, it is single-handedly the biggest disbursement risk profile that we have. So with that, if you haven't registered for next month, we're going to have another special guest from the FBI, the person that actually is responsible for wire fraud and business email compromise out of the DC office. So a high-level representative, and we're going to unpack the IC3 report, but more importantly, we're going to see where is the puck moving so that we can position ourselves to have the safest spring and summer market for not only our businesses, but our customers. So, all right, without further delay, let's roll. We're going to walk into just quickly a background of mortgage payoffs. So to set the table, what we're talking about is in a purchase transaction, you have a seller, and most often the seller has a mortgage that has to be paid off so that the property can be transferred free and clear to the new buyer, right? Stripped of any liens or encumbrances. And as part of that process, we have to obtain a mortgage payoff statement and safely get to the mortgage company of the seller those proceeds to settle out and ultimately discharge that mortgage. Interestingly, and why we saw a big uptick last year, it's the same cadence for a refinance. So while we're not changing ownership, we're swapping out one lender for another, but the payoff sequence is the same. that generated a tremendous amount of activity as far as dollars into title company escrow accounts last year. Roughly $3.4 trillion of loan origination went into our escrow accounts. And just based on percentages of open mortgages, just under 3 trillion went back out in loan payoffs. So these are staggering numbers when you think about all of the different, incoming and outgoing funds transfers. The typical loan payoff centers around, now it's about low twos to 250,000 nationally. It just tracks the average home sale price around the US. So what I'd like to do to start is I would like to launch, and I've never done this, so I think we can do this. We want to launch some poll questions. And Robert, can you see the poll, the first question?
It was the okay. What does this button do moment. I like it. It seemed to have worked.
Look, man, I'm ready to roll the dice. So let's go to the first question. And I know we have law firms, we have title and settlement companies. I know we have a lot of underwriters. For those of you in the industry, I'm trying to get a sense of how many loan payoffs do you administer on a typical monthly basis? So if you could go ahead and answer that. Can you see results like I can, Robert?
I'm not seeing results at this point, but I am seeing that I can't vote. I'm not permitted to vote.
Yeah, I didn't click that box. Not that I don't care.
Oh, no, it's all right.
All right, and then the second question, and then I'll read these off as I think everybody's already skipping down. What best describes the current level of concern around mortgage payoffs? And I try to keep these questions short. What practices, the third question, are you using to safeguard those payoffs? And then kind of more holistically, as we look to this area and it intersects wire fraud, who do you think's most at risk? And I was trying to dissect these and put a question throughout, but Zoom just allows me to render them all at once. So, all right, I'm going to read the results here. So roughly 40% of the attendees, a little over 40%, administer up to 50 closings or payoffs per month. And then we have some very large companies that are doing more than 300. So thank you. Roughly 2/3 are in both kind of tails of the bell curve there, up to 50 or over 300. There is a high level of concern. So there's roughly 90% of everyone suggests that it is either a medium or a high concern. By and large, the verification is the mechanism, the callback procedure is the mechanism to verify a mortgage payoff before it's sent. And this is really interesting. Half of us believe that buyer cash to close is the biggest risk, while the other half sees it as mortgage payoffs. And there's some edge cases around EMD. So I'm going to end the polling here.
Risk to those on the call.
I'm going to share the results. So I'm going to let everyone see these results here.
Cool.
So you can see here where we landed, and I'll share this with everyone after. I think I always love polling just to get a sense of where our head is as an industry. What was your question, Robert?
Oh, I said that the risk to those on the call is greatest on the mortgage payoff, while the risk of having the buyer's money cash to close stolen, it's not a risk to the title agent other than reputational. You're not losing money, you have a horrible situation to deal with, and you want to be able to support them. But for those on this call that are in the business of making mortgage payoffs, you have huge risk there.
We do, because we're the custodian of the funds, right? That's the thing. It's our money, and when we wire that out, and for those of you who don't know, that I went through as a title agency owner a roughly $200,000 wire fraud, and we wired that money out, and my partner and I had to replenish that the next day. That's just how it works, in the hopes that you're going to recover it. To Robert's point, on the buyer side, there's a tremendous amount of risk. While it might not be the next day economic risk, we're seeing that risk in reputation. Obviously, it's not good for business when buyers lose their life savings. But there's also a legal risk that continues to grow around the standard of care and we've had some buyers earlier on last month's session where the buyer lost $76,000 to a wire fraud and shared his story. So yeah, very, very significant. So thanks everyone for the poll questions, and I will certainly share those. All right, I'm going to bring you back into the early 80s, and other than me lighting up a cigarette, and I've never smoked, and putting an ashtray on my desk, we're going to talk about how mortgage payoffs are done the same way that they've been done now for, I would say, 35 to 40 years, right? So the payoff flow kind of looks like this. When a title company is asked to insure a loan, either or insure a transaction, an owner's policy, or especially a new loan policy, they have to obtain consent from the current mortgage holder to obtain a payoff from their current lender, whether that's Rocket or Chase or whoever the mortgage lender or servicer is. So what'll happen is the borrower will put a loan number in, some personal information, social security information, and then the request for the mortgage payoff statement will be administered from the title company. And I'm not joking when I say this. The way it works is you take the social security number, typically, sometimes just the last four, the loan number, maybe the zip code of the property, and you key it into a phone number given by the servicer, and then it will recognize that based on the sequence of information you're providing, oh, you're talking about the Smith loan or the Jones loan. And then you, as the person asking for it, gets to decide what fax number they send it to. And this is how, what do you think, guys? 95% of mortgage payoffs are generated across the US?
I would agree with that, Janine. I think you can speak more intimately to the payoff process.
Yeah, I say you see less faxing than you used to, but yes, that's still a common practice.
Yeah, and the reason for the fax is they think the fax is secure because it's going through the phone line. No, nobody's going through the phone line anymore. The fax is converted to an email server, right? And then it goes into the email distribution network of the company. So once we get the mortgage payoff, that's what tells the title company, okay, what's the loan amount? What's the per diem interest? What's the good through date? And that allows us to calculate with a little bit of extra a settlement number that we're confident that when it closes and we send the money in and the lender gets it, they have enough to fully close and discharge the loan. That's the whole exercise kind of end to end. But to Janine's point, tremendous amount of those are faxed or ultimately sent through some email device. There's no other secure way right now that title companies or settlement providers are receiving payoffs for loans. How long would you say, Janine, it takes to go through this process of borrower authorization through like full disbursement to touch an active loan and get it fully paid off?
Well, it varies between a resale and a refi, obviously. On a resale, the whole process is going to be 30 to 45 days. With refis, depending on your client and how quickly they want to close, I mean, you can be from 5 to 15 days on a refi. It's much shorter process.
And the reason why that's important, especially on the purchase, is that typically you'll have a mortgage payoff with a 30 days good through date, right? If you close in the next 30 days, then here's the per diem interest that you need to add. That allows the fraudster to introduce or update that payoff information within that 30-day period. So sometimes we lose sight of the fact that this actually is a long transaction cycle, a real estate purchase transaction, right? On average, I think it's about 42 days right now, close to what Janine had mentioned nationally. So there's prime opportunity. We're going to poke holes in how they do this. There's prime opportunity for them to introduce fraudulent payoffs. So I went online and I couldn't help myself. I found an old Countrywide payoff. So I thought I would going back in the day. Here's what a payoff statement actually looks like. So you have a
savings.
What's that?
Could have done world savings too. Would have been equally.
Yeah, I could. No, I actually had the implodometer up last week. I was laughing. But this is what it looks like for those of you who haven't seen it. So basically, here's the borrower, here's the loan number, here's the principal and interest. You can see the interest is good through a certain date there, and it ultimately has a total due, and then the daily interest down to here it's a hundreds of a thousands of a penny. And then at the bottom there, you'll see if you're going to wire funds, here's the bank account information, here's the ABA and the account information. Or if you're going to send a certified check, this is where you would send a certified check. Okay, so this is just an example of a typical payoff statement that we would receive through email or through fax. Mortgage payoff fraud deals with a fraudster that's coming in and introducing fraudulent payoff instructions for typically the settlement provider to follow. So rather than paying, in that example, Countrywide, which they became under BOA, I think I'm paying off BOA, but the money lands into a nefarious account. So let's walk through, guys, the example that we want to get to, and it was a recent one going back to the end of last year, beginning of this year, where a refinance was taking place. And Janine, maybe you can voice over just the schedule of the timeline of the transaction, if you will. And we kind of have it graphically depicted here, but walk us through the deal a little bit.
Okay, well, it was a normal refi deal, nothing special about it. We received the order on the 24th of November. And as soon as we receive an order, as with everyone else, we get that authorization from the borrower and we get the payoff out, or get the request for the payoff out. So we received a payoff back. There were some underwriting issues with this particular file, so it lengthened that period of time that we were working on this. So as a result of that, we had to order an updated payoff. We ordered the updated payoff on February 4th and then closed on the 5th. As with all refinances, there's a 3-day right of rescission. We wait for that period to run out. And then on the date of disbursement, we sent the wire out. And from all surface observation, there was nothing strange about the deal. Everything looked good. Didn't know until later that that was not the case.
And how are you obtaining the mortgage payoff? We're going to show examples of what it looked like, but what was the process, Janine, of actually obtaining the mortgage payoff for this refinance transaction?
So we received the borrower's authorization from our client, from the lender, and then that goes out in a secured format, either by, as you were mentioning, that electronic fax. It's not really a fax machine anymore. It's really coming from your email, and send that out securely to the lender. They verify the information, then send that payoff back to us.
Got it. And then ultimately you key that in and you wait for the clear to close from the new lender. And like you say, you have to wait 3 days for the borrower to rescind if they change their mind. And then that's why there's that gap between closing date and ultimately when it was dispersed. I had a question come in, and I think it's timely in the sense that, you know, our company's moving towards exchanging payoffs via secure email server or services. I have not seen that at scale. I think they're still of the belief that the fax, because it's point to point, is the safest way. I haven't seen fax interception. What we've seen is a swap out when the fax actually moves into a mail server environment. Would you guys agree with that? Yeah. Okay, cool. All right, so let's move on in our journey. The original payoff statement, and I'm not showing the first page, this is the second page of it, showed that Shell Point Mortgage Servicing. So for those of you kind of new to mortgage payoffs on the call, a lot of times there's a mortgage lender, that could be Bank of America or Chase, and then there's somebody that takes over the servicing of that loan, that 15 or 30 year period for servicing the loan. So Shell Point is a servicing company that administers payments and taxes and HOA and escrows and everything that you need to do month to month that you might not think about, that when we make the payment, where do all those dollars get filtered into and how does it all reconcile? So Shell Point's the servicer. they bank with Wells Fargo. And that's the information for a proper payoff that would have been received. So let's walk through, bear with me one second here. When the payoff was sent, Janine, it didn't arrive. Can you kind of walk through that moment or how you learned about that? And then we'll dive into what happened.
So, as I mentioned, when we sent the wire out, everything looked good. We had no reason to think anything was wrong. We were fortunate because I would say this doesn't necessarily always happen. We received a call from Wells Fargo Bank, which was the bank that we sent the wire to. And when we send our wires out, we put it attention payoff department. That's part of the memo that we put on those wires. And when the wire department at Wells Fargo saw attention payoff and they knew this was going to an individual's account, it flagged it. And they're like, okay, something doesn't match here. And so Wells Fargo called our accounting department and just made us aware of it. I will say they didn't actually do anything. They still posted the wire. They didn't freeze the account, nothing like that. But they did at least make us aware of it. So that definitely worked in our favor. I wouldn't say that would happen all the time, though. I think we were lucky that someone in the wire department saw it.
Yeah, no, that's one of the first times I've ever heard of even that anomaly. And why that's significant, just to pile onto that, is that unlike a check where the check might have to be deposited for a few days to fully clear the Federal Reserve, wires are immediately recognized as good funds. So if I wired $100,000 to Janine right now and it posted to her account, let's say in an hour, she could immediately transfer all of those funds without restriction somewhere else, or pull it out in cash or whatever it happens to be. So there's no seasoning, there's no lag. The other challenge is, and this is why this anomaly is interesting, is that there's no matching at the Federal Reserve for ABA numbers and account names and account numbers. And you'll see how that plays out in this story. So the fact that Wells Fargo raised their hand, say, hey, I'm not going to do anything to protect you about this, but you just have a right to know that something looks off. That is a bank policy. That's not something driven across the country at the Federal Reserve level, right? So the payoff didn't arrive. Let's look at what happened. So the challenge, the hole I'm going to poke right now into the mortgage payoff process is the fact that it is just ripe for fraud. It's just not a secure process. Let me tell you why. So if I have a loan number and I have the information on the borrower, as a fraudster, I could just simply generate my own payoff. So if I have that information, which I could buy on the dark web in most cases, I could go to my phone, could be a cell phone, type in the information that they're asking me, and then I could direct that initial payoff to wherever I want. And because fraudsters can look at the MLS and sites like Realtor and Zillow and all the syndicated sites, they know what properties are currently under contract because they're those that are in a pending status, right? So they don't even have to guess. If they're trying to deploy a mortgage payoff fraud, they have I call it the deal board. They have a fraud deal board to go to. They just simply pick a market. They're picking more affluent markets right now, and they go and they run their place. So let's walk through what happened, Janine. In the first email is actually at the bottom here, and that's sitting at the 27th. And it looks like you were working with a mortgage lender for the borrower, right? And they were, okay, so walk through this email real quick, just on the fact that you had requested a mortgage payoff but hadn't received it yet.
Yeah, I mean, and it's a common thing that happens. You send out for an update, you're getting ready for a closing, you haven't received it, you need to get the CD approved and balanced, and you're still waiting for that information. So you'll send out a couple emails, saying, hey, we still need this information, here's what we're looking for, and that's what happened here.
That was on the 27th. And then we moved to the 29th. and they're just asking for an update. And I'll agree, you guys weren't dragging your feet. Sometimes they just don't answer. It takes time to get these payoffs, especially from the smaller servicers and the volume at which they were trying to process these things last year. Everything got backed up, right?
Yeah,
But
and it wasn't unusual for that to happen. So if you read on there at the bottom, you'll see that it says, usually we get these really quickly. We're not really sure, why this one hasn't come in the same kind of time frame that we're used to.
Yep, exactly. So we have this normal email string that's coming through. And then ultimately the Denver Financial was working with the borrower. They said, hey, we got it, right? We've got we received a payoff, and it looks like that was on January 29th, which would have been the credentials that I showed earlier, the Wells Fargo account.
Correct.
Right? And then it looks like on let me just look at this email a second here. Moving too fast. And then there was an update. So you had mentioned earlier that there was the need to update the payoff based on the fact that there were some underwriting issues with the loan, right?
Correct. Yeah, there was more of a lag than you usually have on a refinance. Most of the time we can get one payoff, and that's good because it's within that 30-day period. But this one went over that time period. So we did need to get an update to see if they'd made a payment, recalculate the per diem.
Yep.
As you kind of consider the risk here, it just dawned on me that the longer you're working, the longer a file is open, the higher the probability is that there could be some foul play going on in your file, because there's more time to manipulate the parties involved one way or the other and take advantage. It hadn't dawned on me until right now.
I use the analogy of buying a car, right? So, Robert, there's a lot of transactions that could take place today that we would never have visibility to, right? We could leave our offices, go to lunch and say, you know what, I'm sick of the car I'm driving. I'm going to go to a dealership and lease a new car. And I could have that done within probably an hour. No one would know other than the dealer, maybe my bank and me, but a lot of people would love to know. Other dealerships, other financial institutions, the insurance community, but real estate's different. Everybody knows because you're posting it up saying, look, I'm actually in the process of purchasing a home or whatever it happens to be. So what happened now, this is where it kind of takes a turn, is there's an updated payoff that was received from the new lender that was transferred over to you. And what I want to show is the difference. The DFS process at Gmail is an actual trusted email account, right, at Gmail. The fraudulent information came over, and you can see on the top there, processed with an extra S, right? So what happened here is that at some point, the fraudster gets visibility into the transaction, which, as I just described, is not hard to do, unfortunately. And then they'll typically impersonate someone that looks like they're trusted in the transaction, but it's just a character off. It's the fraudster impersonating, in this case, someone that is not associated with a fraudster at all, right? It's the legitimate mortgage company working on the deal. And then they introduce a set of payoff instructions that look identical to those that were on the original payoff. But on the second page, they even opened up the fraudulent account at Wells Fargo. We see that often, but the account number was just a couple digits off. So even though it looks almost identical to where we were sending the money or would have sent the money on the original payoff, they even put Shellpoint Mortgage Services as the account name. The account number is heading into a completely different account. And I'd like to pause here a second and just talk about the risk associated with this. And Robert, maybe as an owner, this isn't just a risk facing those paying off mortgages, but also buyers trying to bring in EMD and cash to close. This issue of just that nuance around, right now they're impersonating Shellpoint, they could impersonate Sun Title, our title company across the street here, or your company. And so why don't you speak to that a second, Robert, that just that risk vector?
Well, I mean, when this started becoming a common issue in our industry, I would say about 4 years ago, it started popping up. It was kind of yeah, it's probably not going to happen to me. I never really had that attitude, but I heard other, people in our industry kind of taking it won't happen to me and we're fine. Then when people actually started losing money, it became a different scenario, right? I refer to it as a layer 2 education problem, because really our relationships, while we value the consumer relationship, most consumers don't have a strong relationship with the title company. They have a strong relationship with the real estate professional. Right. And so we were really challenged to address the issue, because we needed to convince our clients that it could happen to them, which the title industry had already, gone through, and now they're seeing it happen. And to inspire them to let their consumer know that this is a high risk activity and that you are responsible. I was educating people at the time saying, this is the equivalent of like owing somebody $1,000 and going into a dark bar, and saying, hey, I owe John $1,000. And John raises his hand and says, yeah, that's me. You owe me that money. You give him the money, you walk out. And then 3 days later, the real John shows up and says, dude, where's my $1,000? Well, I gave it no, you didn't. You didn't give it to me. So until you are I think the thing that people don't really understand is, until you are in possession of the money, you are not responsible for it. And while you are in possession of the money, you are responsible for getting it to its intended place. I can't be responsible for money that I never received. Right. So we went through a lot of iterations. I did a lot of webinars like this. We took a lot of steps. I think that's where you want me to go, Thomas, right? About trying
we'll go there. I think let me layer on that again. We refer to it as an optimism bias. And I think as an industry, we approach each day that, hey, today is going to be better than yesterday, right? I'm gonna do some things, or I'm running my strategic plan, or I'm creating a new relationship, or I'm doing it more efficiently, right? And that optimism is a great thing, especially as founders of businesses. But the optimism in this area we've seen as an industry tends to bias what the risk really is and how much needs to be done, and continues to what it continually requires to keep the company and the consumer safe. Because I can't just go to pillar 3 of the Alta best practice, check it off 18 months ago and say, good to go. Oh, and if I'm audited, you pull that out of the file. This is an iterative process that the fraudsters are continually honing their craft, right? They get better. And I agree with you, Robert, that it's really hard when we're a degree removed from the consumer, and we have to engage our referral partners, the real estate agent, to say, look, help me help you and them. Because you want the deal to close, you want the referrals, especially in this market. We're going to live and die by referrals, but they could lose their life savings. This thing could blow up and we're all standing on our feet in court arguing what could or should have been done. So that's where, okay, so the money ends up in, ultimately, Janine, back to it, a fraudulent account. You had called the number. I'm going to go back here because these were the instructions. So the 800 number is 365-7107. I independently Googled this yesterday and I called the number, right? Walk me through what happened, because I think the same thing happened to you. I tested this yesterday. I didn't let you know that, but I tested this.
So I think this is the most frightening part of this entire situation. So as your poll showed, most people verbally verify wiring instructions before you send them out. It's the best practice. It's a great way to, try to safeguard yourself. And we have those same requirements. So our closer called the number that she found online. Everyone is trained, don't call the number on the payoff, because if you have a bad payoff, you could have a bad phone number. So she independently verified the phone number. She called the phone number. She gave the wiring instructions, and she was told they were correct.
Oof.
So in her mind, she had verified that wire.
What is your suspicion took place with that phone number?
I believe that the customer service rep that she got on the phone wasn't listening. Or they knew the wiring instructions in their head, and they were only those couple of digits off. And so as they're listening to it, as with all of us, we're all human. When we think we know the answer to something, we kind of mentally skip ahead. And I believe that's what happened. They thought they heard the right wiring instructions, verified it, and said, yes, that's correct. So our closer believed that they had verified that wire.
Well, and imagine a customer service representative through COVID sitting at home with their 4-year-old, I'm thinking of my household, running around with distractions while I'm logged into a VoIP call, endlessly verifying wires. It's really easy to miss this detail. I mean,
Oh, I agree. I mean, here's another title company verifying what we already sent. Okay, sure.
yeah.
I mean,
How
you could
soon
just see.
can I be off this call?
Yeah, there's another technology, and it's been used, but there's the ability to actually, port numbers. And there's a service right now for about $16 that you could essentially, scrape and redirect phone numbers for a period of time. And these are technologies, unfortunately, because of privacy in that have gone up through the federal courts to try to get them shut down because of potential nefarious uses that have been legitimized for privacy reasons. But Ginny, that's one of the more alarming things here is that you followed the best practice. You followed your standard operating procedure. There wasn't because I'm sure everybody was waiting for that. Well, somebody didn't make a call back. You absolutely did.
That was our assumption. And, when everybody goes through and kind of does the autopsy of why these things happen. And when we went back through the file, I was kind of flabbergasted. I was sure there wasn't a verbal verification done, and there was.
Wow. We're going to get into more best practices in a second. I've got a question that came in that's general that I'm going to take right at the end. So I did a little bit of research on the email address that was used to spoof the mortgage lender that ultimately rendered the payoff, right? So in this case, it was a process with an extra S. So that actually originates out of Germany, and the login page for that account actually looks like this. Okay, so this was an overseas attack that was hitting here domestically. Everything that we've learned about the fraud, the business email compromise, and the money laundering networks is an intercontinental exchange of parties and resources. Some are running the plays. In this case, this person was running the play, it looks like, from Germany or had some nexus to Germany. But then you had domestic money mules that were moving the funds. So this was a pretty sizable amount. Just a little over $500,000 was wired on the 10th. And then that's where, and I'm glad you reached out and we were able to assist in the recovery. So why don't you guys talk about just the interplay that we've had and how quickly you have to move to get money back these days?
Well, I'll start, and Rob, interrupt as needed. There was some element of luck for us on this, that I just happened to be on the phone with Austin, one of your associates there at Certified, and I actually put him on hold and picked up another call, and it was my accounting department saying, hey, we've got a fraudulent wire. And I'm like, okay, hold on. Went right back to Austin and said, hey, can you help us? This just happened. And again, there was some luck there because we were lucky Wells Fargo called us. I was lucky I was on the phone with Austin because, as I'm sure you'll explain, time is of the essence on these. You have to be so fast. And the next thing that happened, I gave him all the information, and then, I'll let you go through what you do on your side. But from my perspective, you were able to call your contacts and you were able to get the account frozen. And for us, that was the most important piece, because once the money's in those accounts and that criminal knows it's there, the first thing they do is move it. So if you can't get that account frozen, your money's gone. So everything happened very rapidly, which was great, and really made our success a lot more possible.
I think my only add to that would be, first, Tom, thank you. I'm a large shareholder in Canyon. $513,000 would have had a significant impact on my income from the company. So thank you very much. Like, personally, my family thanks you. Like, it is legitimate. That said, ironically, for the listeners, we were in negotiations with Certified to onboard them. We were vetting them and determining the value proposition, how we would position the services that you offer to our consumers, and making sure that things align. Obviously, you helping us get this 513,000 back, being on with the Secret Service immediately to freeze those funds, there's no way we could have done that. So you're an invaluable partner to any title agency. I mean, if you don't engage in certified services, I don't know that there's anything else out there like it, but you need at least something like it. I would highly recommend Tom and his team. And I am not a paid advertiser, although I appreciate the discount on the invoice next month.
That's great. Let's walk through this. I want to layer on a couple things. What used to be a 72 or 96 hour window for recovery is, think about it, same day or next day. We've got to get visibility to the account or the accounts where the money moved and get those accounts put in what I call a frozen status, right? So that they're not allowed to move or be withdrawn, or whatever the money mule, as they call them, is going to do. I remember this call, Janine, because Austin had called my cell phone. I was heading downtown for a meeting, which is why this was right around early afternoon. And Austin said, "Hey, you're not going to believe this, but we were about ready to start a demo with a company, out west." And in real time, she got notice of a pretty significant wire fraud. So we quickly switched channels. We do have and provide this service for our customers, which is funds recovery services. So what we've identified, especially last year, is that when fraud does take place, right, through no fault of anybody, and Janine, you did everything that you needed to do, right, that there still can be those edge cases that are catastrophic. So we created a solution. We haven't announced this publicly, so I suppose I'm doing it right now, that this is what we also provide. And we've done that through a very unique relationship with the Secret Service and the FBI, based on other things that we're doing together that I can't disclose. But the point of it is that if you're not using a team like ours, you have to have a rapid response plan. We have one on our website called When Minutes Matter. You can go to Alta's rapid response plan that they put out, but you have to have deep contacts at these institutions. And no offense against the IC3 and the reporting through the FBI, the IC3, that Internet Crime Complaint Center, gets an online submission every 43 seconds of every hour of every day throughout the entire year, and they just can't get to it. We just rounded out yesterday our 21st recovery for the year, several million now back. Just last week I was on vacation. I'm literally playing putt-putt with my kids in Gatlinburg, and got notice and involved in $1 million+ buyer recovery for a cash to close wire that ended up overseas. And then just yesterday, I was not Monday evening, I'm at the kitchen table, and I get alerted of a buyer that had wired, just under $50,000 on the 8th to a fraudulent account. And that had gone to multiple accounts, cashier's checks deposited, and now we're in the seizure process to get those funds back in actual checks. So I only say that.
Superhero. You should turn around and show everybody your cape. That's amazing, man. Good work. Stop these guys.
Well, it is. And sometimes we in the industry think, what does stop it? We were talking about this earlier, Robert. Like, is it just whack-a-mole that we're playing here? And I think this is where we as an industry take a step back and say, it doesn't have to be. There are learnings. The reason why I'm so intrigued about funds recovery is there's a learning in each and every one of these, right? Janine and Canyon did everything possible, uber best practice company, yet you still need a team, or you still need that worst day scenario that you've got a net under you. buyers, for those of you that think buyers stand a chance if they're not well educated, if you really understand what they're going through to buy a home in this market, it's a fatigue level that we haven't seen in many, many years, right? And they're just susceptible to that. So what I was excited about for you is that not only we were able to help, the Secret Service was high-fiving out of their JIOC center. I got really good kudos for this one, and they love the live recoveries. A lot of times the feds get involved. Oh, I got to go interview somebody because, you know, several months ago there was an account open or whatever it happens to be. When they can help small business and consumers in particular, you'd be surprised the kind of energy that starts to develop over that. But you got the money back relatively quickly as well. You got it back the same month, right?
We did. And, you know, to your point, if we were trying to do this on our own, I can't say we would have ever gotten any money back, but if we had, it would have taken months.
Yeah.
And one comment about those buyers, all I was going to say is that we've had 3 buyers over the last 4 years lose some funds, significant amounts of money. And each time I asked them and interviewed them in the beginning, were you aware that you needed to call and verify wire instructions with our company? Each time they said yes, and they literally sent the money anyway without doing it. And that to me, the biggest advice you can give your clients, you just must call to verify or say bye-bye to your money.
Yeah, I mean, the profile that we had of the buyer last month, he had successfully sent in earnest money deposit by wire of $4,000, and then his cash to close of just under 80 got redirected when he was tricked. So he'd already done it just a couple weeks before. And it's that, but again, we can sit here and say that's a bad thing, but I think the companies like you, right, you're doing something about it, that own that responsibility, or at least are trying to do a little bit more to protect everyone, are the ones that are going to be sitting here saying, this is not going to happen to me. It's not going to happen to my brand. It's not going to happen to the customers that I've been hired to protect. And we take that same position in our title operation. All right. I want to answer one softball question here, and then we'll get into what can we do. Well, actually, there's 2 questions. Michelle's asking, how could we possibly still be talking about wire fraud and BEC? Doesn't everybody know that this is taking place? And how do we educate people around it? And I appreciate the tone of the question. It is frustrating, but I can tell you, as a leader in trying to solve this problem, it comes back to explaining it in a very clear voice on how it impacts them. Wire fraud, bad, right? Callback, good. Okay, conceptually that framework makes sense, right? Wire fraud, bad. Certified, good. Wire fraud, bad. Insurance, good. Whatever it happens to be. But I think you take and you grab your referral partners by the face mask and you say, look, this is a huge problem that will affect the life savings of your buyer, right? We can miss a mortgage. We can miss HOA. We can miss an assessment. I'll write those checks all day long. You get on the news a family of 3 that is now homeless because they sold their house, they had to move, and now they don't have a place to go. That's a whole different framework, or a lawsuit that's going to take multiple years to sort out if you don't have insurance coverage to pay for it. But I think in that lies an opportunity, right? I think the opportunity is we check the box on this and we continually educate those consumers and those referral partners, where it becomes part of the agency formation discussion, meaning I'm ready to represent you as a seller. I'm ready to represent you as a buyer. Why aren't we empowering our agents to have this conversation way up funnel and get them to acknowledge that this thing is an issue and is going to remain an issue until you get the keys in the garage door opener on the other side of the table, right?
If I could just interject, these criminals are taking advantage of the fact that we were in a refi boom, that underneath that we had all of our resales we were taking care of as well, and everybody's moving fast, including our client, which is the person that needs to educate the ultimate client about what can happen with wire fraud. And when people are moving that fast, they're just trying to get things funded and get things here and there, and they've got to move proceeds to a different title company. it's not something that everybody is stopping to do. We all know. I mean, they're right. All the title companies know, all of our mortgage brokers, all of the lenders, realtors, we all know wire fraud is a problem. But people get caught up in the minutia of their deal, the minutia of what they've got to get done every day, and it just doesn't always get communicated.
Right.
I mean, this is like getting caught up in the minutia of getting in your car and going someplace in a car full of airbags and not putting on a seatbelt. I mean, are you too busy to put on your seatbelt? You shouldn't be too busy to make a phone call to your title company before you send them $513,000, perhaps.
Yeah.
I mean, unless you're prepared to lose it. I mean, if you're okay with losing the money, then be reckless with it. But, you know.
No, that's 100% true. Let's walk through some of the best practices here, and then the questions are starting to come in, which is fantastic. And one came in from a mortgage broker saying, as a mortgage broker, what do I do to protect myself, or what's the best practice?
Ooh. So number one, you need to get with counsel, and you need to get you need to get a wire fraud disclosure in your sign-up package and an indemnification, making it very clear to them that they are responsible if they are sending funds, and that they must call to verify, and that they are agreeing to verify by nature of doing business with your firm. Number two, encrypted email. Stop using Gmail. Stop using Gmail. We are operating businesses. There's tons of NPPI that we're sharing with each other. Obviously, we're using secure mail on the title company side. Anytime we're sharing NPPI, we consistently see real estate agents and mortgage brokers using Gmail and sending information to us that they should not. I'd say those two things alone make a massive difference, and they're easy.
They are easy. I agree. I mean, I'm a recovering lawyer, and in codifying the understanding up front about wire fraud and the fact that they need to pay attention and tune into this. I agree 100%. Secure email, multi-factor authentication,
Yes.
email settings and policies. I mean, if you don't have an in-house tech department, you can spend a few $100 a month and have some of the brightest people around you in security, making sure that you're not on the wrong side of history when it comes to this wire fraud issue at any point in time.
I have a vendor. If you want information, email me, robert@canyontitle.com. We can help. In fact, we're launching a program in the next probably 12 months that focuses in on secure mail because we just see it so rampant. But people view moving their email as an inconvenience. I find that lawsuits surrounding lost funds is far more inconvenient than having secure mail. That's just my 2 cents. But I will add that on the 3 instances that we've had, each time we did receive letters from law firms claiming that we had compromised email, and we have logs and records of everything that happens in our infrastructure through CloudStar, and there was no evidence of any sort of tampering on our side. So my response to these letters was quite simple. We were not compromised. But what I wanted to say was, however, you may want to take a look at the 3 other Gmail accounts that were involved in this. But sometimes they were my clients, so I couldn't say that. I didn't want to put the scent hounds on the issue and then damage my client and say my client doesn't have my back. But I have to say, in many cases, our clients are the cause, almost exclusively. Because you can go get that, Denver Financial email account. You can get that off their website, and then you can start kind of creating your entry. So sorry to ramble on, but
yeah, or you send a phishing email, somebody gets email access. I mean, here's how it works, guys. If I have access to, I'm a secure agent.com, a real estate agent, or I'm a secure agent at gmail.com is how it plays out. As a fraudster, I just need email account access once. I go in and I put a forwarding rule in that says any email coming into this account or from this address or these addresses get automatically forwarded and then deleted from history, even if the agent went in and reset their password every single day. That forwarding rule will remain.
Yeah.
You have to log out, change your password, put on multi-factor authentication, and kick that guy and look at the settings and kick that guy. He's always a guy in my mind because that's what we found. It is. Right. But that's what a lot of people don't understand, right? Is that these rules, and the last report that I heard is they could be in an email account up to 6 months before they start to run some of these plays. So they're willing, look, if it's a $500,000 or in last week's instance, over $1 million payday, look, they can sit and monitor with their computers for a while to make sure that when they strike, they're striking on a pretty big target.
So the other thing that's interesting is these hackers all have different skill sets. The fraudster is who actually executed, my guess is, on the wire instructions from ShellPoint. But sometimes there's phishing involved on the front end, and then that information is sold. So they get this forwarding rule in place. They then use AI to monitor what's happening in there, and if there's certain keywords, it points it out to this guy, to these folks that do the phishing. Then they turn around and say, hey, I've got a live one here. I'll sell it to you for 1,000, or I don't know what that market looks like, but they sell it. And then then the fraudster takes it from there. So they're buying access to situations in many cases. And sometimes that's layers deep of almost a whole separate economy.
100%. It is an enterprise business model. You're exactly right. You've got teams, you've got what we would think of departments. I mean, it's an assembly line from idea to fully converted into fiat currency once the money lands overseas, right?
Yep. Very sophisticated. I always think to myself, if these fraudsters that are so brilliant would use their skills for good, they could change the world in such a positive way. Instead, they hide in other countries and in safe places for them and sit here and pick off our money, because that's the best way they can think to use their time. Shame on them.
No, I know 100%. All right, let me blow through these real quick because I've got some really good questions that I want to get to, and I know we're going to bump up against time. So independently obtain the payoff to the mortgage broker that had sent the information. Just be aware that if it's not a good idea to share payoff information if you're not the one that's going to be administering the payoff. It's a chain of custody issue. Don't be in the middle of something that could render liability where you're just trying to accommodate. And the challenge with split closings is just that. On a split closing market, and we have a lot of those in the Midwest, like Michigan, is that the seller's title company will obtain the payoff and then send it to the title company that's dispersing on the buyer side. Well, there's just a massive breach possibility in the exchange of that information between title company to title company, because unlike Canyon, a lot of them aren't secure, right? And they're not putting in the resources to make sure that what's coming out of there can be trusted. When it comes to treasury templates, so there's a question about how do you acquire treasury templates? It's not so much acquiring them, it's in the other side. When you log into your treasury portal of your bank, outside of your title production software system, you can actually save, or you should be able to save. And if not, you might want to think about transferring to a bank that allows you to save known trusted credentials on their side of the server. So for example, our policy at Sun Title, we use certified for every account on the payoff that we don't already have in our treasury template. We will not wire against a mortgage payoff that does not show up in a saved treasury template at our banking institution. We will not do it. So a lot of times that might mean we may have to call to verify, but then we triangulate the verification, and you guys are freaking me out now about the callbacks. We had a whole management meeting about that yesterday. But then also send them a check. Add a few, look, it's better, guys, to eat $38 of interest, know that you've got enough padded in that check, and then you could deal with it maybe the next time it shows up, or go to your underwriters and ask them, hey, does direct operations in our area have some trusted known templates? I just need a point of verification where money has properly landed. Just think creatively that you can't be the only one that's paid off, Nation Star or Mr. Cooper, right? Create policies that enable a failover. Don't succumb to the pressure that the wire has to go out, because otherwise you might have a shortfall request that you have to provide to your manager or owner. Just tap the brakes, make sure it's proper. Do not send that wire unless you're on really firm footing. And I cannot say this enough. Something may go wrong. And I hope and pray it never happens to anyone on this call, because this is why you're here, to learn. But you gotta have the framework to rapidly respond. I call it ASAFP, like right now. You gotta jump on this, and you have to know exactly what to do. ASAFP. Yeah, it's my own little IP, right? I haven't trademarked it yet, but what's concerning is that the buyer that we are helping as of Monday evening received a call yesterday from his bank saying there are no funds to recover. It's a total loss. And that's not true. It's not true. But that's the information he got from his banking institution, right? So that's where you have to have an incident response plan. All right. This has been great. Questions are rolling in. I'll try to keep, how long do we have here? We have no time, but I'm just going to answer these. We answered the treasury templates. There was a good question that says, what about sending wiring information and leaving off the last 4 digits so they have to call? Again, I don't think that's bad. It's just, you have to document everything, right? The challenge though is, what if you're spoofed and the buyer is convinced that it's you and they don't make the phone call? We're telling them to call. We're telling them that this is, and that's where, you know, a solution like ours comes in, where we are confirming not only that they received it, but they have the option to insure their own funds as they're transferred into the account. And if something goes wrong, we're there to either insure that or help them recover. I don't think it's a bad idea. I've seen this around, and it's kind of a developing philosophy. But again, it's about engagement. They have to do it.
We considered that model pretty extensively. And I think the challenge with it is exactly what you said. If there's a spoofed set of wire instructions from us, no one's going to know that it's only the last 4 and that you have to call to verify. So you still have the same problem if they're in the middle and they don't call. So we focused on, you must call us. It's a very simple thing. Call, pick up the phone, call. There's no other way. We also let people know in our initial delivery of that, this is the only time we're going to give you wire instructions. There is not another time. We are not going to change wire instructions throughout the process. And we're about to implement text AI that before the closing, right about the time where that fraud's going to take place, do not send wire instructions without calling to verify us, and do not trust anything that you receive. Canyon will never send you wire instructions at the last minute.
Right. And I think that is the key right now, is that you educate them and you keep them engaged all the way to the end. Mm-hmm. Right. And I applaud that, Robert and Janine, because that's the missing link. You got to get the wiring information out day one. That's what Certified can help you do. And someone's asking, how can Certified help title agents? You know, we're going to protect the buyers because we're going to educate them. We get them wiring information. You get confirmation they received it. They can insure it themselves. But then what does that engagement process look like to keep them tuned into this issue when the fatigue and the stress starts to set in? And all of a sudden they get this weird email that says, oh my gosh, if you don't send that, because of COVID, all my staff's out, we had an outbreak, send me the money now, or else we're not going to be able to close, you know, next Friday, and you could lose the deal. I mean, I've seen these emails and they're very convincing. These aren't the Nigerian prince email scams anymore. These are cutting and pasting from previously trusted communications because they're sitting in someone's email account. Yep. Right? There was a question around whose email was compromised, or was a Gmail account, whatever. You know, I don't know. This could have been a payoff that they originally generated themselves. A lot of times we see that. A lot of times we see the real estate agent or the mortgage broker, and I'm not throwing shade in that direction at all. But usually it could be the consumer, actually. We've seen situations where the seller's email is compromised. That's where they harvest the information, and then they spoof everyone in the deal to get title and settlement or the law office to wire funds to a fake account. All right, let me see if there's one more here. There's one about our hotline number. I'll take that offline, just because we have a funds recovery services number for our customers. That's a red phone to red phone, either to me or another team member that's working that. So, all right, guys, I cannot thank you enough for telling your story. I know it takes some courage to come out and say, hey, this happened, but I think for the betterment of the community, I want to thank you as being a member of that community, that you're willing to use and share your experience for just for educational purposes like we're doing today. So any thoughts you guys want to add as we wrap up here?
I would say the only thing I would add is just don't think it can't happen to you. I'm kind of a compliance hawk type of person. We follow all the best practices, and it still happened to us. So just don't ever think that you're insulated from it, because they're very smart and they find ways around it.
And just to add to that, in the circumstances where we had buyers' funds to close stolen over the last 4 years a few times, each time we did an autopsy on those circumstances, and a minimum of 7 times we made the consumer and the professionals around them aware of the risk of this. They had the information they needed and they made the decision anyway. And for the professionals that are on the phone, whether you're on the origination side or the closing side like us, it's mission critical that you just bang it into your consumer's head that you just don't mess around with this. This is a Delta Squad SEAL Team 6 kind of situation. So feel free to reach out to myself or Janine if you want to discuss this further. We're happy to help advocate for this really important cause. And I can't thank Certified enough for A, helping us recover the funds, and B, helping our consumers be more safe by choosing Canyon in partnership with Certified.
No, that's awesome. That's awesome, guys. Well, thank you. Thanks for everyone for attending. Don't miss next month. It's going to be basically this same time next month, where we're going to have the FBI, and we're going to get into the grit of what happened last year and, like, tip of the spear, what is trending this year. And I think the volume of wire fraud starting out this year is something that we have never seen, unfortunately. So I think it'll continue to be a risk that we're going to have to manage like any other risk. But I also think it's something that, when done as part of the operational and the culture of the organization, you can certainly improve your position. So with that, guys, I'll sign off. Janine and Robert, well done. It was great to connect again.
Thank you so much. It's always a pleasure.
See ya.
Have a great day.
Bye.